Hey everyone, it is Thursday morning, and you know what that means. We bring back Jonathan Twomley to talk about what's going on in the world. How you doing, sir?
I'm great, Michael. How are you?
I'm doing well. We always got to start Thursdays, I guess, with new unemployment claims. And one number doesn't make a trend yet, but it's today's number was not good.
Yeah, so we're up by more than 100,000 new claims over last week. So we're up to 1.4 million.
Yeah.
This is the first increase since March. So basically, we had the peak in March, and it's been trending downward ever since for new claims.
Yeah.
And now, for the first time, it's going in the other direction. So, I mean, listen, I think this could be a trend because it's not just a sudden uptick. It follows last week where it was basically flat from the week before, which
Right.
showed a bottoming out. And we know what's going on in the southern states and in California, where cases are just spiking, and the reopenings in the Northeast where they've handled the coronavirus better, arguably, are not enough to offset the new claims, the new shutdowns happening elsewhere. So, this is not good news, obviously. If there is any kind of silver lining in the numbers, it's that the continuing claims are down.
True.
So that would suggest, if you kind of net it out, that there's net job, it's hard to call it creation. More people are going back to work.
Absorption, maybe.
Yeah, I mean, more people are going back to work,
Right.
Than are getting terminated or getting laid off.
Yeah.
So which is good, but it's not like new job creation in a hot economy.
No.
This is just people being allowed to go back to work.
Yeah, this is unfortunately I was hoping we wouldn't get here, right? I was hoping the trend would continue and we'd finally break the 1 million mark. I mean, to think we're 18 weeks into this and we're still seven figures every gosh darn week is, I don't know, disappointing. But to see that reversal and then to see what else is going on, right? We have a lot of companies that are just giving up. They tried to hold on. For example, Wynn Resorts just today. Right?
Did it really?
Yeah, they paid $250 million over the last 78 days to keep 15,000 people employed. This today, they came out, actually it was yesterday, I read it this morning. They're going to be issuing layoffs this week, and they're going to be shutting midweek operations. And, we had Nike just the other day come out and say they're going to restructure and lay off. And again, I was a manager in tech for a long time, and it's a very human resource driven thing. And now we have a report that says 53% of tech workers, right where I live, are nervous about being laid off in the next 6 months. It's that second order, when you drop a pebble in a pond, it's coming. Yeah. And unfortunately, it can be bigger, and it's going to be higher in jobs. These are the people that are being laid off that the extra federal bonus doesn't help them, right?
Yeah.
Their mortgage is so big or whatever. This is going to hurt, I think.
Yeah. Well, first of all, I like to say well, kudos to Wynn Resorts for trying to keep all those people on the payroll for all this time.
Yeah.
I think that's
good point.
That's commendable. It's too bad that they have essentially run out of money and can't do it any further. Mm-hmm. I guess they were taking, they believe that the coronavirus could be tamed quickly and they could ride it out, and they didn't want to lose those. You don't want to lose your human resource. You don't want to lose that human capital, right? So they wanted to keep those people on board so they could start up quickly. Now what they've decided is like, we don't know when, there's no end in sight, and if we restart, we're just going to have to restart from skeleton crew and build up again.
We got to survive at this point, right?
Yeah, rehiring, retraining, everything. So that's certainly bad news. Mm-hmm. Speaking of stimulus, I don't know if you saw where this is headed now, but we finally have. We've known all along that the Democratic kind of bargaining position for second stimulus is keep it where it is.
Yeah.
And I'm talking about the unemployment benefits.
Yep. I'm aware.
Through the end of the year. The Republicans have finally come out and said something about it, which was $100 extra a week. So now we have.
Oh, actually, hold on. There was actually a change just this morning. Secretary Mnuchin tweaked that a little bit. He now says 70% of last wage. So
so the thing is though, that there's no Republican position on this yet. Because the administration and the Senate are fighting with each other. They're not in agreement. So the Senate position is either 100 or $200 a week. I've seen both,
Yes,
but
I've seen both.
the most recent one I saw was 100, and that was from from Mitch McConnell himself.
Yep.
So that's where they're staking out their ground. So which means that most likely it's going to be cut down the middle, so around 300, but it's not going to be. It ain't going to be 600 again. And if it's not 600 again, and whether it's capped at 70% of prior wages, whether there's, I've seen them talking about, it'll be different depending on the state. If you live in a high benefit state, you'll get more. In a low benefit state, you get less. So the theory being it reflects the cost of living somehow. Right? So, but still not, the Republican hard position is we don't want to disincentivize people from going back to work.
Correct.
So we don't want anybody making more money than they were making when they were working. And so that's their, I don't think they'll compromise that position.
Agreed.
So whatever the case is, here's the definitive answer is it ain't going to be $600 a week.
Correct.
Right. And so that is going to impact everything. It's going to impact consumer spending. It's going to impact the ability to pay rent. And on top of, and that's, for our conversation, that is the most important.
I agree.
Piece of this
dramatically.
Yeah. And for your tenant base that has no savings to speak of, and now they're not working. And if they're only collecting unemployment because they can't go back to work, they're going to be making less money than they were when they were employed. And that's going to impact their ability to pay.
Yep.
And, on top of that, it's already the 23rd of July. There's not even a Senate bill.
Mm-hmm.
There's not even a bill yet.
Yeah.
And they all go on vacation August 7th. So that's Jesus. The drop dead deadline for them to do something. So I suspect something will get done by then, but there's going to be a gap. So people are not going to get paid. It's going to take states are now having to, as of next week, they will all unwind the $600 bonus.
Yep.
And then whatever is passed, they will have to reprogram all the computers at some point in the future. That will take several weeks to happen. And you have some states, noticeably Washington and Nevada, that still haven't paid people their unemployment benefits in the first place.
Oh my gosh.
For the last several months, because they have antiquated systems and small staffs, and they have not been able to process these applications. So
I did not know that. Wow.
Yeah. And there's other states that are having some issues as well. People can't get through to claim their benefits. So if you think about it, as we've talked before, the peak unemployment, new filing unemployment claims ever before this was, 650,000 or so.
Mm-hmm.
We're still more than double that.
Yeah.
Right.
Yeah, we are.
And so states just can't keep up. Now, like for instance, in New York, I was been surprised by how smoothly it's gone here. But in some states, it just hasn't. So what we can count on is just more dislocation from whatever happens before things get back up to speed again, but less money being pumped through the system. Now, that depending on how you feel about government debt and government spending, either this is a good thing or a bad thing, but you put that aside in terms of just the direct impact on rental housing. If people have less money, they're going to pay less rent. And so that's why the national, real estate lobbying groups have been lobbying like crazy to keep the additional stimulus money, the additional unemployment money flowing, because they know where this goes if you start cutting these benefits from people. And, I guess the argument there is probably something along the lines of, we hate it when the government spends money, but if it's going to spend money, we want it to spend money on us.
Yeah, exactly.
That's so, which I think is pretty much the position of every business,
every lobby. Yeah.
We don't want you spending money on anybody else, but please spend money on us.
That's fair.
So
that's good.
But it's and with eviction moratoriums expiring in a lot of places pretty soon, unless they're extended. I know Massachusetts just extended theirs, but listen, I've been saying this for a while. I see a lot of people commenting, like in my group, about they're upset about these eviction moratoriums, and I always look at it a little bit like, yeah, but where's the long line of people behind them?
Yeah.
You can kick these people out, but like, this isn't January when
Right.
if you evicted somebody, you had somebody waiting to get that apartment. Like this
Yeah.
is now a different time. So yeah, you'll get them out, and then you're going to have to go spend a bunch of money on a
Yeah.
turn,
Yeah.
and then you're going to be able to rent it. Who knows? But probably if people are having their benefits cut, and the other thing too is, I mean, if they're unemployed, right? Like I don't know if anybody's who knows, maybe people are out there when they are taking applications saying, oh, you're getting $600 a week from the government, that's good enough for me. But I think the way that most
Maybe.
that most approval systems work is, hey, show me your pay stub.
Mm-hmm.
And
I would
no
hope
pay
so.
stub. Oh, no pay stub. Oh, sorry, I'm not renting to you.
Yeah.
So I don't really understand where with unemployment that's this high, depending on who you talk to, either 11% or 21%, depending on how they're counting.
Yeah.
Like where all these renters are supposedly going to come from to fill in these vacant apartments. So anyway, that's my rant. I think a lot of people are just they're so kind of like pay me by rent or get out, which totally understandable, right? I mean, normal circumstances, that's how you feel. But right now, yeah, pay my rent or get out. Yeah. Okay. But then what? So it's,
Yeah, I was a landlord. So the worst time to be a landlord until now for me was actually 2007. And that was because everybody was leaving and moving into a house because of that stupid lending environment, right? I actually had to do months of rent and free month rent and half deposits and all of that stuff. And where I was going with this is, yeah, you actually had to make calls. Sometimes you wouldn't evict, right? You would, because you didn't want half the units vacant, right?
right.
Right. So there were business decisions sometimes. You know what? We'll start that eviction next month. But yeah, it being a landlord in a tough economy is hard, especially in an apartment building where everybody's on top of each other, right? If you have space in an environment like today, that is better. Space is good, even in apartments. Garden style apartments are better than vertical apartments today. But one thing I know we talked about briefly before we hit record was transaction volume in the commercial space was down. So you read something there. I thought we could talk about that.
Oh yeah. I mean, transaction volume has just plummeted, right? So compared to the same time last year, down 70%.
Oh my God.
Across the board. This is for commercial property, right?
Yep.
So not for single family homes, which are going the other direction.
Yeah, but, they're going the other way.
But for any kind of commercial property, and that includes apartment buildings,
yes,
70% drop in volume. And the reason for this is what you might expect. Sellers don't want to list don't want to put properties on the market right now because they know they're going to have to take a haircut, and all the buyers are looking for a big haircut. Mm-hmm. So there are some things coming through the pipeline that were already in the pipeline. Some of those things are getting retraded for small discounts, 5 to 10%. Mm-hmm. But really volume is down because everybody basically knows what the score is, and they don't like it for one reason or another, right? Yeah. So there's been this idea floating around that there's this enormous amount of dry powder on the sidelines, and this is going to somehow keep prices high. I think what you see right now just gives the lie to that, because I think sellers, frankly, if you told them, hey, I could guarantee you only having to take a 10% discount off peak pricing, I think a lot of sellers out there would jump on that, because even at 10%, they've made a lot of money, assuming that they bought, 4 or 5 years ago, right? Yeah. Maybe if they were buying it to flip it, they bought it last year, then they're not in the money at that price. But if anybody who's held it for a number of years would still make a substantial profit even at a 10% discount off peak pricing, because there was a big run up in prices at the very beginning of this year, right? Sure. So you kind of be back to 2019 prices, which a lot of people were happy to pay. and happy to sell it.
Mm-hmm.
The issue with this, like, supposed huge amount of I mean, there's no doubt that there's a huge amount of capital on the sidelines. The idea that this is going to prop up prices, though, obviously 10% discounts are not enough for that money to jump into the market. That's not what that money was looking for.
No.
That money was on the sidelines in 2019 and 2018 and some of it in 2017 when prices were substantially lower
Yes.
than they were at the peak, because they felt it was overpriced and they thought something was coming where they were going to be able to buy distress. So that money is waiting for real distressed prices. They're not waiting for 10% discounts. It's not interesting to that money, right? They're looking to make outsized returns, and their overall return, even adjusted for time, when they buy things at a substantial discount, makes it worthwhile to have all that money on the sidelines for years. So that's where this is going. You're not going to; those people are not in the business of losing money. If they think that there is more, there is a further decline to happen in property values or in rent collections or whatever, they're going to continue to sit on the sidelines. A, because they think the discounts will be bigger if they wait. B, because if they buy now, they know they're buying into a falling market. So you're not going to see that money come off the sidelines until there are real bargains available. It's going to have to fall that far. Now, I've heard, real estate talking heads speculate that 20% is the number, but I don't buy that number. And the reason that I don't buy that number is because those talking heads are always overly optimistic, right? They're always going to underestimate the decline and potentially overestimate the upside, but they always and you saw this the last time around, Michael, I'm sure you remember this, that there were people in the midst of the crash saying, some people were saying there is no crash. It's not really, I mean, I don't know what their argument was, but essentially like, oh no, like the data is wrong, or it's bottomed out.
It's always bottomed out. Yeah, I remember
it's always
that.
bottomed out. And like you would see the National Apartment, the National Association of Realtors, like every time they said anything was always, it's bottoming out now. Our expectation for the future is price rises, starting next quarter. And like every quarter they said, oh, it's bottoming out. And eventually they were right, because it eventually bottomed out, but they said it was bottoming out every single time.
Yeah.
So I really am skeptical about this. And the longer that this coronavirus goes on, and the longer that we have, the more states we have reclosing, the greater discount expectation I think you're going to see. And if Congress doesn't pass another big stimulus bill, then I think you're really going to see the vultures getting ready, because I mean, but not spending yet, because they're going to say, look, I mean, these people are not going to be paying rent. There's a lot of property that's going to go into foreclosure, and or into some kind of workout, or we can do short sales or whatever, or we can buy the paper at a discount, whatever it is. Yeah, that's the opportunity they're waiting for. And I think, if you see,
let's play that. Let me noodle that a little bit, because let's just say for, again, neither of us think this is going to happen, but let's say they decide no stimulus. We're done. Nothing's going to happen. So that starts August 1st, right? Yeah, we're in July, August. So now tenants stop paying, so they don't pay. They probably pay August because they got their July check. So that doesn't start till September. You don't get September rent, blah, 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 pay me, don't get October rent. Now you're probably talking to your bank, trying to get a forbearance or something. But, if you just play this out, nothing of material retrades probably till March or April of next year, right?
Yeah, I would think so. It's going to take a while for this to work through the system. And I think there'll be the first reaction will be, well, it's going to get better soon. Right? Yeah. Everyone's going to say, it'll be better.
You'll hold on. Yeah.
You'll hold on. Don't worry. Like, we'll be back up to normal soon. And that'll be the first reaction. Nobody will kind of capitulate right away, but I think you'll see through the fall and winter, more and more businesses just throwing in the towel because they have to go into some kind of workout with their lender or whatever it is, because they
Yep.
they're just not collecting the rent. And
Right.
and I think for a lot of properties that were bought, and the real risk is to the properties that were bought at the peak, because they, properties that bought earlier on have more cushion, but properties that were bought at the peak, with peak pricing, peak debt loads, and essentially, their underwriting to justify those prices had to assume that the good news was going to go on for the foreseeable future.
Yeah.
And those are going to be the ones that get hit the hardest.
Agreed.
And that's the case in every cycle, right? That's always the way it works.
Yeah.
So,
The other thing, going back to your point, is, again, I invested in the last cycle and bought a lot of stuff. What I remember is the better stuff retrading or actually going into escrow around 35% discount to the peak is what I saw in my market.
right.
And then the stuff that was more like C class, it got as low as 50% of peak pricing. And we did several deals, many deals at that level. So yeah,
So
go ahead.
you're talking about single family rentals, right?
No, both. No, I was talking about apartments. No,
really? Okay.
Yeah. So I was buying small apartments, right? The biggest thing we own is 20 units, but still I was looking all the time. The nicer stuff in what we call the north side of town, it was retrading at about 35% discount. Stuff that I couldn't afford, right? Hundreds of millions of dollars, or tens of millions anyway. But then the C-class stuff kind of in the city, we're trading at 50% ultimately. We bought lots of apartments at that price.
Yeah.
So that could come again.
Yeah, it could. And look, I mean, unemployment was like 11% nationally. I don't know what it was like in your area there when that happened.
Well, it was, I think nationally it was 10. I think it peaked at 9.9, right? Or 10.1 or something like that. Maybe.
No, it was a little higher than that. It was like 10.7 or almost 11.
Yeah, let's call it 11. Yeah, Fresno was not crushed last time. But yeah, it wasn't horrible. I mean, I don't have a comparison yet to today because it's kind of all this fake economy stuff. But that's just a thought about where stuff retraded last time.
Yeah, I mean, look, and you have, one thing I think people should understand is like they complain about places like California and New York because taxes are high, or Massachusetts or whatever. Frankly, those economies they're a lot more resilient than a lot of other places where
more levers to pull for sure.
Yeah, I mean, in the more diversified economies.
Yep.
I mean, I saw obviously I invest in the Carolinas, and I like those markets for a lot of reasons, but I think they have more risk in some ways than like your major metropolitan areas, because unemployment stayed very high for a very long time in both those states. And I think because they just didn't have the same kind of
diversification of
employment and the kinds of and obviously it's location specific, because what happens in like Research Triangle is different than what happens in like a rural part of North Carolina, right? So those are also different scenarios. But you have to there's always a trade-off, right? There's no perfect market. There are markets that are good in some ways and bad in other ways, and the opposite is true too. So I just think the advice is like, never get carried away by thinking that a market can't lose, or that just because you like the politics of the area that makes it a better place to invest. Like it's not those things can help, but it's not like a guarantee. So
for sure. Yeah. The other thing I thought we should talk about is and it goes back to a previous discussion we had, is you're actually looking at doing something different perhaps for the next 6 to 12 to 18 months. You want to talk about that?
Yeah, no, I mean, I got some other, some new ideas in the hopper, which are kind of a new thing for me. So one thing is that I'm actually looking at in upstate New York. And that's not an area I would typically look at because of the all of the restrictions in New York, and plus upstate New York has got population decline going on. So normally I would not even touch something like that. But looking at just there some stuff we've is distressed enough can be good in any market, right?
Yeah.
So I'm actually going up to look at a deal next week that is a major rehab deal that could work, and it also has a component of potentially ground up development which for the specific market could work. So I'm going up to investigate. Another thing that I'm thinking about, because simply I'm just looking myself to buy a second home upstate. I've just, in talking with brokers up there, have realized that because of coronavirus and people wanting to have more space and buy second homes, there's parts of New York that where you can't buy a house right now.
Right.
For, that things are flying off the shelves, literally, spending 1 or 2 days on market. They're asking or over for sales prices. And the interesting thing, though, is that everybody wants turnkey stuff, right? So this is definitely a second home market. This is not people who are looking to do a fixer-upper, that they're, they want their escape from New York City, and they want it now, and they want it to be ready the minute that they want to be able to use it. And so that presents an opportunity for fix and flips, because there's a lot of stuff on the market that's in bad shape. And people want turnkeys. So that's obviously, there's a delta there. So if you can buy it cheaply enough, do your renovations cheaply enough, and then turn it around as a turnkey, it's going to get bought. So I'm actually looking into that right now too, because I think that would be, I've never done a flip. I think it'd be fun. I've always wanted to do one. And so it looks like now is the time to get,
it's funny. It's funny you brought that up when we talked, because I just did a video Sunday or Monday talking about this could be a great time to flip, because we're seeing it. Everybody, single family market is on fire. We just talked about commercial being 70% off. Single family homes, space is good, suburb markets, clean, government backed loans pass, flying off the shelf. I'm like 1 day stuff. It's crazy. I've been doing this 20 years. I've never seen it. So if you have access to money and access to deals, this could be a good time. I'm going to watch you add to your course in your program. I think you're going to have a fun 18 months. I see it in your future.
Yeah, no, this could be interesting for sure.
Yeah. Well, this is cool, man. Thank you very much for your time. I always enjoy talking with you. Let's just put it out there. Let's hope next week's unemployment number is lower. I do not think that's going to happen, but let's just hope it's lower.
Yeah, exactly. Hope for the best. Hope for the best. Prepare for the worst. So
you got it, man. Thanks.
Yeah. All right.